The text messaging part of Grower's Edge is very handy because every day I'll receive a text that shows me where the best local market is.
That's what I like about Grower's Edge too. It gives me the information I want on my smartphone so that if I'm not in the office, I still get the information that I need.
Good afternoon and welcome to GrainTV. It's July 26, 2013. I'm Logan Burgess. To my right here is Brock Shimino. Let's jump into Fire Tip and see how the grains closed out the week here. As you can see here, relatively mixed trade and a lot quieter than we've seen here for much of the week. Old crop corn down just 4 cents. New crop off 2 3/4. August soybeans finally tried to find a bottom in today's action, down just 5.5 cents. We had new crop soybeans picking up 4.5 cents. Wheat market very quiet today, up just a penny in Chicago. Kansas City wheat off just a penny. You know, Brock, certainly a week that saw a lot of big changes there for the new crop contracts.
Yeah, if we take a look at this table that we set up here, you can see that December corn we were off by 26 3/4 cents. And the interesting thing to note here is that we're at the lowest point that we've seen since last November of 2010. So about a 2.5-year low for the December corn contract. Soybeans, we were off 66 cents on the week for the new crop contract. That's the lowest we've seen in about 2 months. And wheat for December contract down 17 cents. That's actually a contract low to finish out the week here.
Yeah, you know, Brock, as we said, a lot of negative action on those new crop contracts, certainly. And kind of looking forward here, certainly it wouldn't be a surprise if we saw a little bit of a rebound next week, I guess. But looking more long term, I guess my consensus is that given the conditions of this crop and how things are looking right now, we could be in for some further losses. And maybe it might be a good strategy to price some more if we do see any rallies. Are you kind of in that camp as well, or where do you stand on that?
You know, we did see significant losses this week, and like you said, I wouldn't be surprised to see a little bit of buying action to come in next week. I wouldn't expect a significant rally. We are incredibly oversold, though, for especially in that soybean market, so we could see a little bit of buying interest. I think we saw the beginnings of that here today. But yeah, I'm in the same camp. The weather looks basically ideal for the next about 7 to 10 days. There's precipitation anticipated almost every day. The weather or the temperatures are in the upper 60s to lower 70s for this weekend, only rising into the low 80s next week. So really this crop is off to a very good start. We have about a month left in really the production phases of this crop, so there's really running out of time for us to have any damages to this crop. We're still anticipating really big production for this year.
Yeah, certainly. You know, weather's going to be the thing to watch here moving forward, especially over the next week or two, and we'll keep you posted on that here on GrainTV. You know, kind of switching gears here, looking at the old crop, certainly this week saw some massive losses there for the August 13 futures contract, and we saw basis back off substantially as well. Take a look here at the chart that we've been looking at all throughout this week. Once again here, the blue line is the average spot soybean basis against the August contract. The red line here is those August futures, the August futures price here. And as you can see from the chart, substantial decreases in basis here have kind of been helping this futures contract move lower. Last Thursday, we saw average spot basis 65 cents over the August contract. Just yesterday, we saw that now 39 cents under. So certainly, really, the wind has been sucked out of the sails, I guess, of the cash market. Certainly, one thing that was helping that out was news from the Chinese that they're going to be selling 3 million metric tons of soybeans from state reserves into their domestic market. So I think that had people a little bit concerned about export demand in general. I guess here, looking forward, where do we have to go from here? We certainly saw August 13 soybeans hang in there today. That price level of $13.50 that we were watching did hold. I believe last trade here was $13.50 1/4, so just by the skin of its teeth. But we'll have to see what comes down the pipe next week. Certainly we know that this market's extremely technically oversold, and just in today's action we've seen basis firming a little bit at some key players. So I wouldn't be surprised, I guess, if next week on Monday or you know, Sunday night, if we do see a little bit of strength return to that market. Certainly the sell-off's been drastic here.
Now there's been some talk that a lot of end users and grain buyers are starting to hold off and wait for the new crop to come in. We are just a couple of weeks away from harvest, especially in the southern part of the growing regions. There's been some talks about you know, shipments of grain moving back up to Mississippi. What are your thoughts on that, and is that going to affect the basis levels?
Yeah, you know, that's a great point. Let's take a look here at the corn map that we have, and now the shipments of grain up in Mississippi that we've read about have been specifically about corn. Nothing in particular about soybeans to report on yet. But take a look here at the map. Basically, Widespread area of substantial losses for average corn basis here over the last week. You can see that leading to the downside was Iowa, southern Minnesota, out into South Dakota there, and eastern Nebraska as well. Interestingly to note, this was one area that's been really strong in terms of basis here throughout the marketing year for the old crop, so kind of a role reversal there. We really saw that move lower, and like you said, Brock, as early as next week, there's expectations that there could be grain, early harvested grain coming from as far south as Louisiana, Arkansas, moving north along the Mississippi River as traders try to capture what's left of the old crop basis there. So that's certainly weighed on things. Very similar situation if we look at soybeans here. The losses were really widespread and quite dramatic here. Take a look here out in the western Corn Belt. On average, we saw a lot of facilities down $2 on the week. Now, this is just in terms of basis, remember, so $2 is absolutely massive in the basis market here. And if you look out east, about $1.50 was kind of the average that we saw back off there as well. So, as I kind of discussed earlier in the show, there have been some rumors that the Chinese are expected to sell some soybeans out of state reserves, and that really got the export market nervous. We certainly saw big basis declines out in the western export market and down in the Gulf as well, so that certainly didn't help any inland basis on the old crop. We'll have to see what it does next week. Certainly a very interesting market right now for this old crop soybean market in general, considering futures and cash.
Yeah, we've seen a very interesting market here, like you said, futures and cash prices. We'll have to see if this stops next week or if we continue to move lower. We're heading towards first notice date on that August soybean contract, so that'll be something we'll have to pay attention to in the early parts of next week. If you have any questions about what we talked about, give us a call, 877-472-4607. Make sure you follow us on Twitter, @GrainTV is where you can find us there, or check us out on Facebook.
Have a good one.